this is coming to an end, and this is how you get ready. Governments have been trying to tell you that gold is this barbaric relic for years, but they're buying.
But we're still buying, exactly.
Hi, I'm Mike Maloney, and I'm joined once again by Jeff Clark and Adam Taggart. So how are you guys doing?
I'm doing great, Mike. It's great to be back with you this week. And Adam, thanks again for joining us.
Hey, it's my pleasure. It's my favorite show of the week. So thanks, guys.
Well, listen, we have all of our regular segments this week, plus a meme of the day. We want you to stick around to see that. So we're going to jump right in. So this first item here, this first article of the day is on Zero Hedge, but it's written by Jim Rickards. If you don't know, he's a very pro-gold individual. And he says that the war on cash, the next phase on the war on cash has begun. And he's referring to CBDCs, central bank digital currencies, that he thinks are coming. It may not be imminent to him, but he thinks this is coming and it will be instituted because governments will refuse to give up on their control of currency. He refers to it as money, but he's actually means currency. So what do you guys think? Central bank digital currency, it's on the way, Mike. What do you think about that?
Yeah, absolutely. I've been saying this for quite a number of years now, and he actually covered everything but he did it in a very succinct format. It's a very well presented argument for this. It's absolutely true. Everything in it is something that I've been saying for years, but he's left out something that I had missed, and then George Gammon did a segment on this and included that the currency is programmable. When you've got a digital currency, you can make, like, it's just like the smart contracts on Ethereum. You can make a certain set of conditions that has to be met before the currency can actually be transferred or spent. And so they don't need to track you quite as much. They don't have to have somebody actually looking at what you're doing and spying on you. All they have to do is give you currency. If they don't like you, if you don't have the social credits that you might have to accumulate if you're a Chinese citizen, they go on they're going on this social credit system. Your cash can be programmed so that you can't spend it 50 miles from home. You can't buy a plane ticket to certain places. You can't, they can control you without having to spy on you all the time and see what's going on afterwards. They'll be able to determine what you're able to do in life beforehand. And then if you're able to do something outside of what they want, they will be able to punish you. But the scary thing that I've been saying for many, many years now is that they can turn you off as a citizen just with a switch. They can freeze you out of the economy. And the only thing left is to beg and to try and barter, to trade with people. But they can freeze you out of the financial system completely if they don't like what you're doing. I think this is very scary. Jim Rickards has created a great article here that sort of wraps it all up, ties it together into a very succinct, very clear thought. But the one thing that he did miss in here is that the central bank digital currencies can be programmable, where certain conditions have to be met before it can be spent. And so it's a pretty scary world coming up. But I like the closing statement. If cash is gone, there is only one way to escape digital surveillance of wealth: physical gold. So what do you think, Adam?
So I agree with all your points there, Mike. I think it's a little bit spooky because we touched on this briefly in last week's discussion. We talked about how governments love the concept of CBDCs for many, many reasons. But one is that they have visibility into every transaction. They know where all the currency is. And so when it comes to tax time, they've got 100% visibility. So there's a fair amount of the economy right now that's still handled in physical cash. that the government does not have visibility into. Mike, if I want to give, your nephew, $40 for mowing my lawn, I can do that. And, government's none the wiser most of the time. They'll be able to have visibility into every single transaction and to make sure that they collect their cut on every transaction going forward. So we were mentioning that last week. And that's just one small example of both the loss of privacy, but also the loss of control that you were talking there about, Mike. If the government thinks you owe it, right? If they think you've done your taxes wrong or whatnot, they'll just take the money. They'll take the taxes they think they're owed, and then you're going to have to follow up to appeal, right? So you're guilty until proven innocent. Also, if they suspect that you're doing something they don't want you to do, it's just like today's civil forfeiture laws. They'll just freeze your accounts. And again, it's going to be up to you to have to do all the legwork to try to prove your innocence and get access to that money. And as you talked about the money being programmable for certain things, I want to note that this is not, in theory, Jim's piece was talking about the U.S. might come here in a couple of years, but China is actually piloting this right now. There are actually millions of yuan that have been shared out there where they're actually having people, experiment with it in real time. And one of the things the government's done there is some of those digital yuan, they are making they put an expiration date on them. And so this is a way, if the government wants to increase the velocity of money, if it wants to boost spending, it basically forces you to do that with a spear tip at your back, because if you don't, the money is going to expire. So this is a central planner's wet dream. And I see how it's great for them, and they're going to sell it to us because it's more efficient. They're lower transaction costs. They talk about increasing the stability of the system. But I think really those are all just excuses to get us to line up to do what's in their best interest in the long run.
Yes, I agree. And I was watching your Wealthion interview with Luke Groman today, and he's talking about going into inflation, arguing against deflation. But he did agree. I believe there's going to be a very short-term deflation. When the markets will crash, there's going to be, the banks will get scared. They're going to stop rolling over loans. They're not going to be making new loans because interest rates can go down to zero. But if they're not loaning any currency, it doesn't really matter. Doesn't make a difference. They can't control velocity right now. As long as there's cash, they can't control velocity. But once they have this ability, when they can control everything that you can do with the currency, and yes, making it expire or nibbling away at it with hugely negative interest rates in your wallet. The interest rates are built into your phone wallet, and cash is vanishing at a certain percentage per month to get you to go out and spend it right away instead of keeping it in your wallet. So yeah, this is, I still believe, though, that we're going to experience this short-term dip, and then they're going to overreact. It's all in episodes 6 and 7 of Hidden Secrets of Money, the description of what velocity is and how this affects it. But this digital cash, this is really a dangerous thing.
It really is. Well, it's good input, you guys. I think I'll continue to denominate a large portion of my savings in physical gold and silver in light of all this. So, well, on to tweet of the day. This is from Galactic Trader. Endeavor Silver, which is a primary silver producer down in Mexico, withholds over 500,000 ounces of their mine production silver from the market. He's referring to the Q1 report from Endeavor Silver, which just came out, in anticipation of higher prices. The CEO there is Brad Cook, who I actually know. I've been to most of Endeavor Silver's projects down there in Mexico. He has done this before, and he's doing it again because, as Galactic Trader says, he's anticipating higher prices. The total's over about 530 ounces of silver. Most of it's in doré form, which is like a bar. Some of it's in concentrate. And by the way, concentrate is like a powder that is end up being sent to industrial users. That's what they use. But the point is that, Mike, that he is withholding selling some of his production, almost 45% of his production from Q1, Mike, because he thinks higher silver prices are coming. Adam, what do you think? CEOs of silver producers withholding selling some of their production for higher silver prices yet to come?
Yeah, so I think this is really just a great example of, watch what they do and not necessarily what they say, right? When the boots on the ground operators they're in the business of selling precious metals. When they actually hold inventory back, it's because they are the closest to the heartbeat of the demand for their product. And what they're seeing is that they see enough higher demand down the road that they want to hold on to that right now to be able to sell into that higher demand later. And that's not an easy decision. So when you see operators take steps like this, it is a very bullish sign where prices are headed. And, pundits like us, we look at a lot of data, we try to connect as many dots as we can, but we're not as close to the heartbeat as those guys running those companies. And so I think this is a really important and very bullish tell.
It is, because he has conviction, obviously, that prices are going to be higher because, again, this is almost 45% of their entire quarterly production. So he's very convinced higher silver prices are coming. So, well, if you're liking this video, please hit that like button for us there down below, and be sure to subscribe to our channel also down below. So, well, guys, on to tweet of the day. And this is from Dan Popescu, if I'm saying your name right, Dan. This is great because it's a chart of the official gold reserves from the country of Hungary. And you'll see that they just announced here recently they're going to dramatically increase just how much gold they're going to put in their reserves. And they're going to go from 30, let me get the exact number. They're going to go from 31.5 metric tons all the way up to 94.5 metric tons. So they're going to triple their exposure to gold. And in their press release, they said that the decision was based on long-term national and economic policy strategy objectives. Gold is one of the most crucial reserve assets worldwide because it carries no credit and no counterparty risk. So this is a huge jump in reserves for this country. In fact, it's one of the biggest central bank purchases in many years. So, Mike, what do you think of this? The country of Hungary tripling their gold reserves.
Well, if you go back to Q1 of 2018, Q2, they were down at 3.1 tons at that point. And so it isn't just a tripling. This is 30 times, not 3 tons. This is 30 tons, from 3.1 to 94.5 tons. Another thing in this graph, when it's flat, they're lying because they can't accumulate that much all at once without causing an enormous price spike in gold. So they're buying month after month saying, oh, it's the same as last month. Oh, it's the same as last month. Oh, it's the same. They're reporting this same as last month. This is what China has done for decades. They've been accumulating every single month, but reporting what they've been reporting for the last several years. And then suddenly they disclose what they have accumulated. Now, this graph here ends in Q1 of 2021, which is over with. So have they already accumulated the 94.5 tons, or is this target that they have?
No, I think they have already purchased this amount.
Yeah. Okay.
But you're right, Mike. What they do is they don't just go out and buy it all at once. Many of these central banks do the same thing like China's been doing, where they accumulate and then they make an announcement once they're ready to do that. If
you draw a straight line from that V dip back in 2016 to the 94.5 tons, that's more than, well, if you go to the bottom of the V dip, this is more than a 30-fold increase, but it's more than 30 times from 3.1 to 94.5. And it's much more like the real accumulation is much more like a straight line from those 2 points. But it also makes me question, is 94.5 really the stopping? They're probably it's going to go flat for a little while, and then they'll announce that they've actually accumulated more. What have you got, Adam, as far as an opinion on this?
Yeah, just to say my earlier point, politicians, they'll say anything. What you got to do is actually watch what they do. And as you've said, these countries oftentimes will be mum for years, and then all of a sudden announce a tremendous jump in holdings, right? And so, what we need to do is just look at the trajectory. And I think, Mike, you've done a good job of underscoring it. We're seeing a 30 times increase from 10 years ago or so. What this is telling us is that governments, central banks, et cetera, are out there accumulating gold, and there's a good reason for that. And if they're doing it, we should be doing it for the same good reason.
Yeah, they know something is up. We're getting to the end game of this fiat currency deficit spending nightmare that we're trapped in, this Keynesian nightmare. This is coming to an end, and this is how you get ready. Governments have been trying to tell you that gold is this barbaric relic for years, but they're buying.
But we're still buying, exactly.
Right. Well, if central banks are aggressively accumulating gold, so should we, I think. So, well, on to reader feedback, guys. This is from Silent Bliss. The Perth Mint is having a huge problem to deliver physical silver to their customers since last week, offering customers 1,000-ounce bars from China from a Chinese refinery instead of their own bars. And this is happening beyond just the Perth Mint. It's happening with some of our other competitors as well. And basically, this is referring to unallocated metal. Unallocated metal means it's not allocated to you. And in many cases, they actually don't have the metal. So this is becoming a increasingly serious problem. Mike, what do you think?
Well, this goes back, way over a decade. I warned about this in my book. So I was writing about this stuff in 2006. And now people are actually getting trapped in this. They bought in, they were being sold a boatload of crap, basically. Sorry. Pool accounts are very often nothing but futures contracts. You're getting some price exposure. You just want to make sure that you're in at least an allocated account. If you really want to go secure, you go segregated. But you want to go into some place where there is gold allocated to you on the books. It's physical, it's insured. And that's the reason that back in, I think, 2007, I went and made a deal with Brinks in Salt Lake. And I was one of the first dealers to open up storage accounts where it's a third-party vaulting service that is not part of the banking system, where the guys with guns are guarding your gold. That's what you're paying for. And it's fully insured and highly liquid. You can sell it at any time, and then the cash is back in your account, usually within 48, 72 hours. Sometimes when there's a rush on things, Brinks gets behind on their paperwork. It might take another day or so for the cash to show up in your account, but it's as liquid pretty much as stocks. I was surprised the last time I sold stocks out of my brokerage account, it took another day or two longer to have the cash in my account than what I can have if I sell some. And I did sell some gold and silver back in 2017. I sold everything, was out of it for a month, and then rebought to start the clock ticking again for the IRS, since I've got some special tax advantages here in Puerto Rico. Anyway, yes, this is just something to stay away from. Pool accounts, it's dangerous. I warned about it in my book back in 2006, 7. Book came out in 2008. So, Adam, got any comments on this?
Yeah, just quickly, it's the classic Warren Buffett line of you don't know who's swimming naked until the tide goes out. And, that happens with these pool guys, right? Which is, the danger is that they keep taking customer orders once they begin having trouble actually getting the inventory themselves. And then they get in this hole where they've sold so many orders, they can't deliver on them because they're not getting the inventory in time. And then that can create kind of a vicious cycle. This happened earlier in the bullion industry. It's probably a slightly different variant of it. But you might remember the firm Tulving that imploded, which was one of the bigger retail providers out there. And literally they went down overnight because of this, where they had just sold way too many orders and they actually had the physical inventory to back up. And the companies we're talking about here are bigger companies that are probably going to make it through, but it is the similar type of risk. And so that's why when you own precious metals, you want to have some in your hot little hands, right? As safe, the most dependable way for you to get your hands on it. And if there's some sort of Armageddon type situation, you can really count on that. But otherwise, beyond a certain amount, you want to have it held elsewhere. And if you do, you'll want it to be allocated, if not segregated. And Mike, I've sent a lot of people and a lot of capital over to the platform that you use. And I sleep very well at night, knowing that they sleep well at night, having that type of solution.
Yeah, we recently introduced something called InstaVault, where it's allocated gold and silver on the books, but it's fractional ownership of the cheapest form of gold and silver that we can possibly source. And so what you're getting is full price exposure. And more than that, you actually own physical gold and silver, but at these very low spreads. And then later on, if sales, if the rush into gold and silver subsides, the spreads on things like silver eagles, which, for a long time, we stopped selling silver eagles because it was just almost a crime to sell
crazy premium.
Eagles at $12 over spot and stuff like that. These enormous premiums. It just felt wrong, and it wasn't something that I felt that my customers should go into. Now you can go into very inexpensive silver, watch the price move, and then if sales slow down and those premiums come way down, you can convert to whatever form you want, 100-ounce bars, rounds, silver eagles, whatever you want. Same thing for gold.
Very good, guys. Well, next up, Mike, I understand you would like to say something about Adam's new YouTube channel, Wealthion.
Yeah, well, I was just watching the Luke Gromen interview. It was wonderful. I want to tell everybody that they really should go over to the Wealthion YouTube channel. The quality of people he gets to interview is quite amazing. So take a look at that. He really does have a very good way of just asking the right questions and then letting the person tell their story. So a great interviewer and great interviewees on this channel. So everybody should go take a look at it.
That's very kind of you, Mike. Thanks so much. And all I'll say, folks, is if you want to go check it out, go to youtube.com/Wealthion. And I'll continue to try to deserve the praise that Mike just gave me.
You've had some great guests on there. I think Adam talks to everybody. So there's some big names that are on his channel. So check it out. Well, on to our meme of the day. So, Mike, tell us about this meme you want us to see.
Well, this is basically our country being remodeled by the Federal Reserve. That's the name of the contracting company, the Federal Reserve. This is what our country looks like, the economy and the stock market. I want to thank everybody for watching. Goodbye, Jeff. Goodbye, Adam.
See you, Mike.
I'll see you, Mike and Adam, next time.